Good morning, students. This is the continuation of Subsidiary Books video lesson, second part. So, good morning, all the students. In the last video lesson, we learnt what is the definition of subsidiary books, why we are using subsidiary books, what is the need of subsidiary books, what is the importance of subsidiary book, what are the subsidiary books we have in that category, purchase book, why we are using purchase book, why we are using sales book, what type of information we have to record, purchase returns book, sales returns book, and cash book, introductory part. So, this information we learnt through the previous video lesson. That previous video lesson is continued here. If you didn't watch last video lesson, please watch last video lesson and subscribe my channel. So, that is part 1 subsidiary books, this is part 2 subsidiary books. So, let us continue subsidiary book. What are the subsidiary books we have? Just glimpses we have to remind. What are the glimpses we have in subsidiary books? We have that we just glimpses we will see. So, all the subsidiary books we have, one is purchase book, sales book, cash book, purchase returns book, sales returns book, bills received book, and a bills payable book. This is another one is journal proper. These 8 subsidiary books we have. In these 8 subsidiary books we already discussed in the previous video lesson about purchase book, sales book, purchase returns book, sales returns book. About these 4 subsidiary books we discussed in detail along with proformas, how we have to record the information in the books of accounts, in what way we are recording that information. It is already recorded, it is discussed in the previous video lesson. Okay. Of course, cash book introductory part also we discussed. So, in this video lesson we will continue from cash book onwards. Why we are using cash book, for what purpose? Right. So, in this video lesson just we remind what is cash book, why we are using cash book as a subsidiary book, as an account. So, one thing you remind, cash book is used as a subsidiary book and an account also. Cash book is used as a subsidiary book and an account also. So, 2 in 1. So, this cash book is used to record cash transactions only. For this purpose, a separate cash book is maintained, that is cash book. So, here cash book consists 2 halls. Cash account consists 2 halls, debit and credit, left part and right part. In left part we write cash receipts and the right part we write cash payments, right. So, that we discussed in the previous video lesson also in detail. So, now we have to discuss about the classification of cash book. Here the classifications of cash book is simple cash book, double column cash book, triple column cash book, and petty cash book. So, simple cash book is also known as single column cash book. So, let us see one by one in detail. So, simple cash book, it is prepared like a cash account in ledger. So, just now we discussed cash book is also, cash book is known as subsidiary book. In the same way, it is used an account also. All the cash received are entered in amount column on debit side, and all cash paid appears on credit side in amount column. Cash book is closed and balanced at the end of the month. The pro forma of simple cash book is as follows, right? So, we will discuss in detail. So, this is single column cash book, single column cash book. This single column cash book, what does it mean, the single column? Single column is nothing but whatever the column we have, that is a single column. It is a single column, single column cash book. This column known as single column. So, to record rupees, only one column is maintained, only one column is maintained to record cash transactions. So, that is why that cash book is known as single column cash book. Here you see this partition known as this partition is a cash account is divided into two parts. Left side part, this left side part is known as debit, this right side part is known as credit. So, left side part, in left side part we will write receipts, all the receipts we will write, all the receipts we will write, all the receipts, whatever the receipts we have, cash receipts, you have to remind cash receipts, whatever the payments we have to write in the credit, whatever the payments we have, that we have to write in the credit. So, all the receipts are recorded on debit side, all the payments are recorded on credit side. So, that you have to remind. So, whatever the receipts we have, that is recorded in the amount column. So, let us discuss one and another one. So, this column, date column. In date column, so just now we discussed on debit side receipts, on what date we received. First we have to write opening balance, on debit side, on what date we received as cash receipt, that we have to write on debit side. So, one by one we have to write. So, when we are writing on debit side, you have to start with 2, TO2, and page number and amount, what is the amount we received from others, that you have to write on amount column. In the same way, on credit side, date, in the date column, on what date we paid, to whom we paid, So, when we are paying, we have to write by, we have to start with by stationery expenses, by electricity expenses, by salaries, by rent. So, like that expenditure, all the payments are recorded on credit side. So, page number, next amount. So, these are the columns where we maintain simple column cash book. This simple column cash book or single column cash book maintained by where we will see a small organizations where we have less transactions, there we use this simple column cash book, or single column cash book. There is no simple column or single column, nothing but there is no bank transactions, there is no discount columns, there is no other activities, only just cash payments and cash receipts, where we have only simple cash receipts and cash payments we have, that is it. So, that is why this type of organizations have to maintain this type of single column cash book. I think you got an idea, right? Next, double column cash book. Double column, nothing but the name itself indicates. So, earlier single column cash book or simple column cash book. Now, we are using double column. Double column means two columns. To write cash details in two columns. Two columns. For what purpose we are writing two columns? For one column discount column, another column amount column. Amount column nothing but maybe here also we may categorize in two types. Sometimes the organizations may have bank transactions, may not have bank transactions. If bank transactions are there, one is bank column, another one is discount column. If there is no bank transactions, one is cash column, another one is discount column. These two columns are to be maintained. Of course, in debit side two columns, in credit side two columns. So, let us see what is double column cash book. A cash book with a discount column is called double column cash book. A cash book consists discount column is known as double column cash book. Two accounts or two columns for cash and discount are combined in this book. Discount allowed to the customers represent loss, and discount received represents income, gain, you can say gain, right. So, the pro forma like this. So, here debit and credit. So, we can remind this partition indicates debit and debit and credit. This is debit side, this is credit side, debit side and credit side. So, on debit side cash receipts, on credit side cash payments, right. So, let us see one column, another column, and in date column you have to write date, on what date we received cash, in particulars from whom we received, so that we have to start with 2, and a ledger folio, the page numbers we have to write. Discount allowed, this debit column discount known as discount allowed, debit discount column known as discount allowed, and next column amount. So, the credit part, this is debit, date, on what date we are paying, particulars, to whom we are paying. So, same way in single column also, double column also we have to write, we have to start with by, when we are paying something in the form of cash, then we have to start with by. In debit column we have to start with 2, right. So, particulars, so page number, and discount columns and amount column. Discount here received discount. So, when we are paying to others, the other people may gives us discount. So, that is why received discount is to be recorded on credit side. So, this information gives as double column cash book, payment column and discount column. This information gives us double column cash book. Here also we have opening balance and closing balance. Opening balance indicates previous day or previous month closing balance. This closing balance indicates next coming day or next month's coming day opening balance. So, that is why one should remember, when we are writing on debit side you have to start with 2, when we are writing on credit side we have to start with by. So, that is the information regarding to double column cash book. Next we will see third column, 3 column cash book, that is triple column cash book. A cash book with a discount and a bank column is triple column cash book. 3 accounts are combined here. In business firm, most of the payments are received and paid by check. Transactions are performed through bank. The pro forma of triple column cash book is as follows. Triple column cash book is as follows. Right. So, we will discuss one by one. So, here what we are saying, triple column cash book. Triple column is nothing but 3 columns. 3 columns means one column for discount, another column for bank, and last column for cash. So, these are the 3 columns we required to maintain this triple column cash book. Of course, here also we have debit and credit. On debit side we write cash receipts, and credit side we record cash payments. So, in date column we have to write dates, and date column we have to write dates. All the dates are recorded on debit side and credit side. So, we will see one by one. So, in the date column we have to write dates, particulars. Here we have to start with to, from whom we are receiving. So, that is why to Ramu, to Somu, to my XY company, so like that we received from whom we are receiving, that we have to indicate here. Ledger number, ledger folio, discount. Of course, sometimes in one transaction we may have three activities, 3 types of transactions. Of course, sometimes we may have only one type of transactions. Here 1 type, 2 type, 3 type means we are maintaining three columns. So, in one transaction we may have 3 columns information. In one transaction we may have only 1 column transaction, 2 column transaction. So, whatever it is. So, according to the transaction we have to record the information. So, that is why whenever discount is there, discount allowed is to be recorded on debit side, discount received is recorded on credit side. So, next amount column, whatever the amount we received from the other person, that is recorded here, and a bank column. Through bank column we record here. So, bank receipts, what are the bank receipts we have. So, on credit side, date, on what date the transaction is done. So, that may be payment. All the payments are recorded here, This payment is started with by, and ledger folio number, and discount received when we are paying to other parties, we may receive some discount. So, when we are paying 1 lakh rupee, the other person may give 1000 rupee as discount, then we have to write as a discount of this one. So, here we have to write discount, about discount. Next cash column, and the last one bank column. So, whatever the payments we have through payments, bank payments, all check payments, that we have to record on here. We have to write here in this column, cash column, right. Like this we have to maintain 3 columns. Triple column cash book is the important one, where we see bigger the size, and where number of transactions we have, where all types of activities, all types means discount to bank and cash. So, like this we have various types of activities. We will maintain this triple column cash book. So, that is why this triple column cash book is it is consist more importance. So, that is why this triple column cash book is maintained. Okay, I think you got idea about triple column. This is the most important one. Here we have one more. Idea we have to get here. Contra entry we will have here. Contra entry is nothing but one transaction affects 2 columns. One transaction affects 2 columns. That 2 columns one column may be increased, the another column may be decreased, Suppose let us take example, when we are depositing cash into bank, so in this transaction we are depositing cash into bank, depositing is nothing but we are paying cash, so paying cash is nothing but we have to write on payment side, so only one transaction, cash balance is decreased, at the same time bank balance is increased, increased. So such type of transactions will come here, because we are maintaining bank and cash columns. So sometimes according to the requirement, we may deposit, we may withdraw, so like that we may have. So such type of transactions are recorded here. So that's why all such type of transactions known as contra entries. These contra entries are to be recorded here with indicating A, capital A. Capital A is known as C, not capital A, C, contra entry. That entries are known as contra entries. That C is indicated here in ledger folio column. In ledger folio column, we have to write C. So just now we discussed, we are depositing cash into bank. Cash is decreasing. On payment side, in ledger column, we have to write C. The same posting is again recording on debit side in bank column. So for that column, we have to write C. Right. So that such type of transactions will come here. So that is triple column cash book. These are the information gives us in triple column cash book. This is the most important one, right? Next we will see petty cash book. Petty cash book, the name itself indicates, petty means a little, small. For small payments it is used. It is used to record a small amount of expenses, a little bit of expenses. Of course it is expenditure, but a small expenditure. That small expenditures may not possible to record through the banks or through the triple column cash book or double column cash book. So that's why a separate cash book is needed. For that, that separate cash book is recorded, that purpose. So that is petty cash book. Here this cash book is maintained for only petty expenses. All the petty expenses are recorded here. Example, stationery, cleaning charges, posting, stationery, electricity, office expenses, conveyance, transportation, telephone and telephone postage. So office, what we say, refreshment. So like that we may record all the transactions. Too little or petty expenses are recorded in this cash book. This cash book is maintained by bookkeeper. So whenever a little payments are there, those little payments are recorded by the cashier, petty cashier. The petty cashier received amount from the cashier, from petty cashier, cash received from the cashier, that is recorded on debit side. So here you can observe the pro forma. Here the pro forma, this partition indicates this is debit side, only one column. The remaining part, credit column, Why? Because this type of pro forma we are maintaining means we have too many petty expenses are there. that petty expenses analysis also required. What is the expenditure is required, what is the expenditure is not required. So, like that we have to needed the analysis of petty expenses. Analysis of petty expenses is needed. So, that is why credit column is expanded. Credit column is expanded for analytical purpose. Debit column is reduced to record the amount received from cashier. That is why only single column is needed. Of course, here also we can write date. So, date column for both purpose, debit and credit columns purpose. So, that is why on debit column we have to start with to balance or 2, and the credit column we have to write by, we have to start with by. So, that is why whenever petty cashier received amount from cashier, then he writes as to balance brought down amount. To balance brought down amount, how much amount he received. Sorry, here it was mistaken. Here we have to write to balance brought down, and next we have to write by. So, here whatever the amount we received, suppose 100 rupees we received. So, for that 100 rupees we have to write. So, how much amount we write, how much amount we have to received we are paying. So, whatever the amount we received, that amount is to be recorded on debit column, and that particulars and information is recorded in this column, and credit also we recorded here. So, payments, all the payments are recorded here one by one, and a particular information's classification, stationery information regarding to stationery we have to write in this column. So, in amount column all the information is recorded, but according to the nature of the payment, again we are classifying. If it is there electricity, you are right, office expenses you have to write here, and if any other. So, according to the requirement, the columns, credit columns will be expanded. According to the requirement, credit columns will be expanded. So, that is why this is a petty cash book. It is very useful and it is very informative to the management, how much petty expenses are there, and the classification will be given by petty cashier at the closing time, and here advance also is advance is taken from the cashier. From that advance all the expenditure is done, and in the next month whatever the amount we needed, that is taken remaining balance. So, like that we this process is to be done to record a petty cash book. So, that is why it is known as impressed system also. So, that is why here petty cash book is maintained to record all the petty expenses, all the expenses. Okay. So, when we will come to know the problems, then we will know in detail, then we will get good idea, right. I think you got an idea about single column cash book, double column cash book, and a triple column cash book, and a petty cash book, right. So, next we will see the next one, bills receivable book. Bills receivable book. Bills receivable book is used to record the bills received from debtors. When a bill is received, details of it are recorded in the bills receivable book. In the ledger account, the person from whom each bill is received is credited with the amount of that bill, and periodically total of the book posted to the debit of bills receivable account, right. Here bills receivable book, here in business we may require credit transaction. So, earlier also we discussed a business organization may depend upon cash transactions and credit transactions. So, where credit transactions are there, sometimes may not be believable persons are there, yeah, from other side the customers, then we may require to them you write some paper and to pay on a particular date and for particular interest. So, like that we may take one agreement from that person. So, until that we may believe him, after that the maturity amount will be taken here, So, that is why all the bills receivable amount is recorded here, So, all the bills receivable book information is recorded here. So, here the information date column, from whom we received that information, and term due date, at what time we have to receive the due date, and a ledger folio number, that is page number, and amount. This is the information we maintain in bills receivable book. So, bills receivable book indicate us how much receivable amounts we have, that we will get information through this bills receivable book. And next one more we have, that is bills payable book. Here earlier also, in the earlier case, bills receivable book, from the customers we take one agreement, that is bills receivable book. In the same way, in bills payable case, suppliers supplied raw material to us, we have to write and give a paper to them. Okay. So, for that we have to give a paper, that is bills payable book. Bills payable book is used to record bill accepted by us. When a bill drawn by our creditor is accepted, particulars of the same are recorded in this book. In the ledger, the account of each person whose bill has been accepted is debited with the amount of the bill. The monthly total of the bills accepted is credited of the bills payable account ledger. Right. So, bills payable book. Bills payable book means, so we may purchase raw material on credit basis. When we purchase raw material on credit basis, then the suppliers may not believe us. So, then for that we have to write and give an agreement. Then a bills payable book is given. Such type of information is recorded in this bills payable book. So, that is the information gives us. So, here in this book we have information about date, on what date we have to pay, on to whom given, for whom we have written and given, term due date, may be months, may be days, may be years. So, generally it will in months, that is also short term. For short term purpose only bills receivable and bills payable taken into consideration, not for long term period. So, bills payable and bills receivable comes under current assets. Bills receivable comes under current assets, bills payable comes under current liability. That is the meaning of current assets, means whatever the assets are converted into within a period of 12 months, that is current assets. Current liability means whatever the liability we have, that is to be payable within a period of 12 months, that is bills payable. Of course, current liabilities. So, bills payable comes under current liability, bills receivable comes under current assets. So, this is the information regarding to bills payable. Okay. Next, in detail we will discuss journal proper. Before that we will do problems in subsidiary books regarding to purchase book, sales book, returns, maybe purchase, maybe sales, and cash book, especially cash book. In cash book, single column, double column, triple column, and petty cash. So this is a big topic, cash book. So that's why single column cash book, double column cash book, triple column cash book, and petty cash book. This is the major topic that is to be covered in a through video lesson not possible. Of course, it may covered in 2 video lessons. So that's why these are the subsidiary books which are covered in part 1 video and part 2 video lessons. So with this video lesson is concluded. In the next video lesson we will see what are the problems we have on cash book and remaining other subsidiary books. So let us continue in the next video lesson. With this I will conclude this subsidiary books topic part 2. Next we will see problems in the next video lesson. Thank you.